I think there's actually a couple of you watching live. So if you're watching live, hello. My name is Jack. I'm an entrepreneur resident at White Star Capital, which is a global multi-stage venture capital fund. I'm part of the Digital Asset Fund. My topic today is on the obstacle and catalyst for the buy-side adoption of tokenization. Now, I see that some of you have a background in capital markets, some might not. So I come from a background at the intersection of enterprise software and capital markets. Prior to my current role, I was building a company in the tokenization space. And then originally, I was going to share a fun fact in the slide. Before going to technology, I used to want to be a diplomat. So I speak multiple languages. So the context for today's conversation is fairly simple. I'll actually skip over some of the tokenization stuff, given that this is a Chainlink conference and that's one of the primary purposes of it. But primarily, I'm going to talk about, to give you a state of affairs, what's going on globally in terms of tokenization adoption, and then end with some of the promises and challenges and where I personally think our industry should focus on. So first of all, to leave you all with a question, do you know what happens when you buy a Tesla stock? When you click the Robinhood button, or if you're from Europe, when you click the eToro trading app, when you click buy, but what actually happens in terms of how is the data being transmitted from your app all the way to the exchange? Or how is your bank account? What's your bank account going to do when you pay $100 for Tesla stock? And so this is the world of capital markets, which in my opinion is usually neglected by the fintech or by the developer community. There's a whole infrastructure out there which includes things like broker-dealers, clearing houses, exchanges, settlement infrastructure, etc. All of this is kind of like the plumbing, which are the different pipes that are connected at the back that power our capital markets and power trades and money and value being exchanged. But very often, and actually I gave a similar workshop during FinTech developer conference in Austin in the US, and I was telling the developers, who are mostly FinTech, that they actually they were focused on payments, which is the transfer of money, and all they build in banking, right, which is, let's say, banking as a service, neo-brokers, new forms of insurance apps which use open banking, which is amazing, particularly in Europe. But very few actually focus on capital markets, right, which is a more generalized version of transferring value. So some of the problems in capital markets in general, just ignoring whether or not blockchain is a good candidate, some of the generic problems that are faced in capital markets, things like digitization. So there's a lot of private assets which are paper-based. Think about a private loan. Maybe it's a particular real estate transaction. Well, actually, most private assets are paper-based. And so, or being stored in unstructured data in like a PDF. It's 40 pages PDFs, 50 pages PDF. So the extent of digitization vary by jurisdiction. Obviously, in the West, it's probably a high degree of digitization. And in developing country, it's probably catching up. And then there's what's called the settlement processes. So the post-trade processes when you click trade. I want to buy Tesla stock. What happens at the back? All of that reporting. How do you make sure that your tax filing is correct? Or if you bought $1 billion worth of Tesla stocks, you need to make sure that you've received $1 billion, not 919 million, right? That's 10 million gone. And so that's on the post-trade side. And then there's obviously, as an industry, there's always pressure to innovate, to use new tools, and to think about how can we deliver better client experiences, either to retail, which can be us, or to institutional or corporate users. So specifically, I want to focus on one use case of tokenization, or the parallel of tokenization, which is securitization. So this is actually where the crypto industry, I think for the past day one of the conference, there's a panel, and then today there's 2 panels on real-world assets. The speakers on those real-world asset panels, usually they're building crypto protocols that facilitate a borrower to borrow money from crypto lenders, right, using crypto smart contracts and protocols. Let me think. I think Maple Finance, I'm not sure if they're here today, but protocols such as Centrifuge, Maple Finance, Credix, they focus on a narrow use case, which is securitization, right? Which is the slicing of cash flow. When you get a mortgage, with a bank, the bank usually bundle it up, which is one loan. They bundle it up with multiple different loans. Let's say you belong to Barcelona, right? So maybe a Spanish bank give you a loan, but they will bundle it with 100 different loans with similar credit profile. Maybe you have a similar job, a similar nationality, similar age, and then they package it, and turn it into a mortgage-backed security (MBS), right? And then they sell it in the capital markets. That's obviously, I'm kind of being American-centric because that's how the Americans work, and given that American government intervenes in the MBS market, it's not as simple as it looks. But as you can tell, right, this diagram, there's a lot of intermediaries and a lot of agents involved. Now, I'm not in the business of commenting whether they exist or not, but there is an argument to be made that tokenization can streamline the securitization process because you have a single ledger of truth where you can coordinate different counterparties. So to give you some example, for example, you have the calculation and reporting agent, which their job is to be a third party and calculates how much interest rate each investor should receive based on different tranche of the asset. And so some crypto natives, right, the ones that are building Maple, Credix, Centrifuge, they look into this and said, hey, if we can use smart contracts, put the assets on the blockchain and have some underlying cash flow which streams to the blockchain, actually we can use Solidity, we can use smart contract to do the calculation and to have the logic that automatically embeds all of that. So that's one angle where tokenization can attack in terms of solving pain points in capital markets. Obviously, there are other pain points, right, such as manual wiring instructions, right, manually copying a table. This is how much you send money. You should send like $10,000 for your interest payment, and at the moment, it's still being done with email and text, and none of that is automated. There's actually some attempts to do it to connect with open banking and to do it automated. Europe is ahead of the US with regards to this. So. And this is the context, again, that I gave in the FinTech DevCon, which I briefly talked about. I think what's happening here in the broader context of Chainlink is empowering, and the broader tokenization industry is empowering new types of infrastructure and applications that focuses specifically on capital markets, the movement of assets, the movement of value, way more than just the movement of payments or the innovation on top of the banking core ledger, or as we call it, like close to the metal. And so this is how I broadly see innovation pushing through. But we're not alone, right? Because it has happened in 2017, and this is since 2017 as well. This is a whole diagram of all the different startups that try to attack, front office, middle office, back office of capital markets. And so where we are today in terms of tokenization, I'm going to skip over this because we know this already. This is Chainlink conference. Is the way that I think about tokenization, particularly for enterprise use case, is forget about the decentralization element. That's pretty tricky in terms of getting people to coordinate and getting regulators to sign off, whether the validators are OFAC compliant, whether proof of work or proof of stake rewards count as a ordinary income or capital gains. A lot of that's a whole rabbit hole. But the way that I see this is it's basically a glorified steroid Excel spreadsheet that runs 24/7, and you can write custom logic like macros, right, on top of it. A standardized API, the way that you interact with this spreadsheet, and then all the different changes are tracked, right, so that you have a trail. You leave a trail if anybody cheats. So that's really useful in a trustless environment where money is involved, and everybody thinks that someone's gonna deceive each other and make money off each other. Now, at the moment, some of the adoption of tokenization focuses on private assets. Like I mentioned earlier, this is a diagram from Bain, which talks about what asset classes are going to be easier to adopt. So obviously, we're going to ask ourselves, what type of asset classes suck currently? And those are, the industry. Some of the industry thinks it's private assets because they don't have liquidity. It's not standardized. A lot of it's not digitized, and there's no infrastructure to support them. So here's a list of all the protocols that's going on the crypto native side. So you can tell, I think some companies are probably here today in the conference, and quite a lot of them uses Chainlink Oracle as well. And it's not just a crypto native. There's a lot of institutional adoption. I've collected a bunch of headlines. So again, quite US-centric, but actually securitized. They've launched a tokenized Spanish REIT shares. So that's relevant for the Spanish audience. Among the others, you have American asset managers, Hamilton Lane, you have Hong Kong, Fubon Bank, et cetera, et cetera. You have startups, you have incumbents. There's this one specific use case where Broadridge, which is a sort of financial services enterprise company which uses DLT for repo, again, it's a bit specific. Now, what's the, how do we think about adoption dynamic, right? So my mental model is, look, tokenization is a back-end technology, and we need, in capital markets, we need consensus, right? We need technical consensus, we need social consensus for different stakeholders. What's happening at the moment is, let me see if I can go back. So what's happening at the moment is we have issuers and the services. So basically people that sell, people that issue tokens. They see the benefits of this, and what's missing is the infrastructure and the buy side for this. And actually, it has happened in 2018 with STO, security token offering. But the reason why it's different, in my opinion, is because this time, you have the issuer, you have the arranger or the servicer of transaction, which are more or less aligned, or they're very well educated about the benefits of tokenization. So they're willing to try out, they're willing to push. But what's missing is the investors, right? And in order for tokenization to take off, what we need is we need all 4 stakeholders to agree. And then they need to agree, or they need to work together. And depending on what types of product and services they might offer on top of what types of asset classes. The infrastructure is mostly there. This is, again, this is actually a carve-out from Bain. They talk about private markets. So the types of different processes of fund management issuance all the way to post-trade. It's 70% there. Again, there's something missing. But we're not 100% there because, in my opinion, we're not really doing the promises of tokenization, right? One of the promises of tokenization is you have this, obviously, this base layer, which you can switch. It doesn't have to be Ethereum. It can be Solana. It can be any other layer 1. It should be day 0 cross-border, right? And so on top of it, you could have built different applications that respect different compliances. And some of the challenges that's happening right now is the number 1, there's a lot of complexity in terms of understanding what's actually happening. So smart contract standards, I've just listed 2. There's actually more than that. This one is the ERC 3643, which is known to the security token standard. And you also have different formats of translating financial primitives into code primitives, right? Because one of the core features of tokenization is if we have a legal contract that takes 100 pages, can we do it in the Solidity code? Can we do it in Rust? Okay, fine. Okay, but what are the idiosyncratic scenarios you need to take into account, right? And as computer scientists, you will know natural language to compile a language, sometimes it breaks. And that's actually one of the reasons why DeFi protocols were hacked. And then lastly, there's the complexity of maintaining the fintech and the Web3 tech stack, which there's 2 ledgers and it's pretty difficult to maintain. So it turns out that we're actually running out of time today. So I'll just end up with throwing off one question to you guys, which is that it is really messy out there in terms of all the different tokenization participants doing their own thing. And in order to get the buy side, which runs on a different technology tech stack, something is missing. So let's think about what to do. Right, thank you so much.